All right, let's jump right in. Today, we're taking a close look at a company that's been making a lot of noise in the semiconductor world, Qualcomm. We're going to break down a really detailed new research report to figure out what is really going on with this tech giant stock. So yeah, let's get into it.
So the report kicks things off with a massive question. I mean, Qualcomm is a name you know, right? A leader in their space. Yet their stock has just been getting crushed lately. So the very first thing we have to ask is, why?
And this number, well, it really drives the point home. A drop of over 25% in just 3 months. That is a huge dive, no matter how you slice it. And it's the real reason we're digging into this report today.
Now, if you ask around for the simple answer, this is pretty much what you're going to hear. The story on the street is that Qualcomm is all about smartphone chips, and since the smartphone market is slowing down, well, it only makes sense that Qualcomm is in for a rough time.
But here's where it gets interesting. The analysis we're looking at today basically says that view is way too simplistic. It argues the market is staring at the past and is completely missing this huge strategic shift that's happening inside the company as we speak.
Okay, so before we get to that big shift, we first have to really get a handle on the pessimism. Let's break down exactly why investors have been hitting the sell button so hard on this stock.
And wow, this slide really puts it all into perspective, doesn't it? This isn't just about the whole sector having a bad time. I mean, sure, the broader semiconductor index is down about 7%, but Qualcomm is plunged by over 25%. That tells you the market is pointing the finger at Qualcomm for reasons that are very specific to the company itself.
So, what are those reasons? Well, the report points to it's basically a perfect storm hitting the smartphone world. First up, you've got people like you and me just holding on to our phones for longer, so demand is down. Then there's a global shortage of the super fast memory that powers the newest phones. And because of that shortage, the big phone makers are pumping the brakes on production. These are all very real problems, at least in the short term.
But this is where the report really starts to build its counter-argument. The claim is that while everyone is obsessing over these temporary phone issues, Qualcomm has been quietly and aggressively reinventing itself. Let's take a look at what that reinvention is all about.
So the key to all of this is something called Edge AI. You know, the easiest way to think about it is like the difference between a reflex and a conscious thought. Cloud AI is like your brain deciding to do something. It has to process and it takes a moment. But Edge AI? That's your hand pulling back from a hot stove. It's instant. The thinking happens right there on the device. And that speed is everything for stuff like self-driving cars, where even a tiny bit of lag is a total deal breaker.
And listen, this isn't just some idea on a whiteboard. Qualcomm is already playing in all these new sandboxes. We're talking about the digital brains that run modern cars, a whole new generation of AI-powered computers, really advanced robotics, and augmented reality. They're even funding a brand new startup community in South Korea just to speed this all up. So the real story here is that this is a company building out tons of new growth engines, so it won't have to rely so heavily on just phones anymore.
Okay, that all sounds great. But talk is cheap, right? Is this big strategic pivot actually showing up in the numbers? Well, this next part of the report goes looking for the proof in the financial data.
And here it is pretty much in black and white. Just look at this chart. On the left, you've got the old school handset division chugging along with about 3% growth. Fine. But then look at the bar on the right, the automotive division. It absolutely exploded with 15% growth year over year. This is the hard evidence that the new strategy isn't just a PowerPoint slide, it's already making them money.
And here is another huge signal. The company just gave the green light to a massive $20 billion stock buyback program. Now, a company just doesn't do that unless its own leadership, the people on the inside, believe their stock is seriously undervalued by the market. It's a massive vote of confidence in themselves.
But, you know, it's not a simple story for everyone. The report points out that the smart money, we're talking the big institutional investors, they're completely divided. You have firms like Steel Peak Wealth that are buying up shares like crazy, upping their stake by almost 10%. And on the other side, you've got banks like Comerica selling off their positions. This kind of split shows you just how much debate there is around Qualcomm's future, and that's often where you find an opportunity.
So, with this whole complicated picture, how does the report suggest someone should even think about approaching the stock? Well, this next section gets really practical and lays out a specific game plan based on key price levels in the stock chart. The analysis basically lays out a roadmap. At the very bottom, you've got what it calls the final defense at about 120.80. Think of that as your line in the sand. The report suggests this first buy zone between 124 and 125 is a good spot to start building a position. But what you're really waiting for is confirmation, a sign that the worst is over. That signal comes if the stock can punch through that 133.40 level. And finally, the destination, the final target, is somewhere up between 158 and 173, which is where the analysis thinks the company's stock should actually be trading. So, based on those levels, the report recommends a really disciplined three-step approach. The idea is, don't just dive in all at once. You start with a smaller position around that 125 support level. Then you wait. You let the market show its cards and prove the downtrend is over with a real breakout. And only then, once that new upward trend is confirmed, does the analysis suggest adding more to your position. It's a way to manage your risk when things are still a bit uncertain.
So let's wrap all this up. What is the final bottom line takeaway from this whole deep dive analysis?
The report labels Qualcomm as a classic GARP stock. It's just a fancy acronym for growth at a reasonable price. And what that really means is you have a company that's tapping into these huge high-growth areas like Edge AI, but it's on sale right now. That 25% drop we saw at the beginning? The report doesn't see that as a red flag. It sees it as a discount created by the market's short-term panic.
And honestly, this quote from the report just says it all. The whole argument is that the current stock price is a punishment based on looking in the rearview mirror instead of an honest look at where the company, and really where technology itself, is headed next.
Which really leaves us with this final big picture question to chew on. Is the next massive wave of artificial intelligence going to happen in these giant, faraway data centers? Or is it going to happen right here, on the devices in our pockets and in our cars? The answer to that question might just be the answer to what happens with Qualcomm.